What is up, my beautiful people? I hope you guys are having a great Monday. Today is Monday, November 3rd. It is actually my mom's birthday as well. So, if any of you guys follow us on social media, anything like that, be sure to go tell her happy birthday. Susan Milner, she is the broker and owner here at Florida Future Realty. So, happy day this morning. We did a little celebrating for that. But now it's time to get some work done for y'all. So let's get into our market update. So we've actually had over the last couple weeks, we've actually had really nice weather. I like to go ahead and document this just for you guys that are out of state. It's about 2 o'clock in the afternoon right now, and it's 82 degrees outside. So very doable. It's not too hot, not too cold. It's definitely getting slightly a little bit warm compared to what it was for the last couple nights. We had 3 or 4 days there where it was getting into like the mid to high 50s at night. So it was really nice. I pretty much just completely had my house open. Really gave you that phenomenal inside outside feeling that we love here in Southwest Florida. But today looks like we're going to get slightly hotter at 3 o'clock. And then we're going to start to cool down throughout the rest of the day. We're going to get to a low of, it looks like the low 60s to the high 50s overnight. But as you guys can see, we're starting to get into that really nice winter Florida weather. But obviously being here in Southwest Florida, we don't get super cold. It's absolutely gorgeous for the most part. As you guys can see here, we've got another 2 days of it being really nice, and then we're going to start to get back up to 84, 85, 86 high for 4 to 5 days there. And then next week on Monday, I'm going to be really looking forward to that as well. We're going to start to drop and get our next cold front. So that's typically how it kind of goes here. We usually get like a week of cold front, then we get a week of more kind of normal weather, and then we're going to get another cold front. But it's definitely going to start giving you that slightly lower average temperature. As you guys can see, the highs in the low 80s rather than the highs in the low 90s. Definitely a lot more bearable. So mortgage rates, we did see a slight increase this week. I'm going to show you guys on the next page. The bond market has actually gone up a little bit as well. So there's definitely been some things going on. I know that the U.S. and China right now are having some trade talks. I don't know. I haven't really been following it too closely. But hopefully once we get some kind of resolution there, we're going to start to see these bonds start to decrease. So my regular technical analysis here is kind of showing me, we're definitely in a downtrend, but we're going to want to make sure that this downtrend continues. So we're really going to want to see something that's looking so we're really looking for something like this to continue to trend down within this channel. That's going to mean that the mortgage rates are going to continue to drop as this bond market drops. So we're really, even though we have within the last week or so, we have had a little slight increase, which has then in turn caused the mortgage rates to increase slightly. It hasn't been anything super crazy, but we're definitely going to watch this over the next couple weeks. I'm actually going to leave these trend lines on here so that way we actually have a reference point to go back to. So if we break out of this red line up here, this red line is our resistance line. Green line is our support line. So as we start to touch on this support line, we start to get a little bit of relief. As we start to touch on this resistance line, we start to get a little bit of selling action, and we see the price action continue downwards. Again, we're just going to see, if we start to see this break out of this trend line, you could potentially start to look for, some bottoms, and we could see rates going up for a little bit. However, based off what we're seeing now, we are continuing to be in that downtrend. Hopefully we continue to keep that for the future. Next up, let's go over the actual stats. So this week we did see a tiny bit of a slight median sales price increase as opposed to last week. Last week was 341,000. This week's 350,000. So we're definitely going to want to keep an eye on that over the next 2 months or so, leading up into Christmas time. Typically, the way that our market works is we get a little bit of a boost from right around Halloween to just before Thanksgiving, and then people take a little bit of time off from Thanksgiving to Christmas-ish. Definitely homes are still selling, but people are down just enjoying the winter, enjoying time with their family, not really going to be out actively looking for houses. And then typically once once December is over, we get into the new year, then everybody, like a flip of the switch, everyone's ready to go start seeing houses again. And then we start to see pretty much until Easter time, almost like a second season. But definitely we're going to want to keep an eye on this. As you guys can see, last year, this time last year, we were already up into the 390s, 385 median sales price, and we held up into the middle of November until we got that drop, like I had mentioned, when people start to take some time off right around the holidays. But we have not really gotten that spike this year. We did see it at the beginning of October. I was hoping that we were going to continue to see this increase, which would indicate a lot of snowbirds in the market, a lot of more high-end deals taking place, but we got a sharp correction downwards. So this definitely, to me, shows that we might not be getting as much of those higher-end buyers as we were anticipating. Definitely something we're going to want to watch over the next couple weeks, though. Closed sales is something that we've been keeping an eye on. So as we've been noticing for the last couple weeks, it seems like the pending sales have been increasing. The total number of pending sales has been remaining relatively high and or increasing. However, the actual closed sales has not accounted for it. So the closed sales are remaining relatively even this week. We've got 191 closed sales this week as opposed to 182 from the week prior. But if we compare this to this time last year, we're down 35%. So this time last year, there was 292 closed sales. This time this year, we're only having 191. So we're definitely, in a little bit of a slower market as opposed to where we were last year. But it looks like last year, this was definitely like the peak of that. But it seems like we're trending up over the last year. We're going to want to watch this support line right here to see if this is just kind of a range. We're either going to break up or down from here. Looks to me like we're probably going to break up, but don't quote me on that. Percent of list price received, we've been watching this as well. So this is going to be a good indicator of how well sellers are pricing. So I thought that, last couple weeks, it seems like the sellers were finally realizing like, hey, this is a different market. We got to price, more aggressively from the start. However, last week we had a sharp 1.2% decrease of, the percent of list price received. So if you're looking at a $300,000 house, that 1.2% off is going to be about $3,000, maybe $3,200. Don't exactly quote me on that. But 1% of $300,000 is going to be $3,000. So, that extra 1% definitely adds up, especially when you're talking about $400,000, $500,000, $600,000 houses, get an extra percent off, $4, $5, $6,000 you're saving there. If you're a seller, this is definitely not a great sign. This definitely means that you're going to want to price as aggressively as you can from the front. Make sure that the buyers are seeing value. They're not going to want to ask for a bunch off of the list price, but then it also means as well, buyers are expecting discounts, so you definitely want to leave yourself a slight bit of negotiating room. Percent of original price received. This one is interesting. So this is showing that 89.2%. So original price is the first listed price on the market, and then listing price is the last listed price. So as we can see here, this one hasn't gone down as much as the percent of listing price received. So it sounds like people from the beginning, they're not, pricing super, super crazy, but it seems like to me what happened last week was potentially some of the houses that have been listed on the market for a while were finally ready, like, hey, let me just go ahead and get rid of this. And then, they were able to take a little bit off of the actual listing price rather than from the original price. Percent closed above list price, we're probably not going to be too high on this. This is one of the lowest amounts that we've seen in weeks. So definitely doesn't really seem like any sales are closing above listing price. For the most part, buyers are having, negotiating power, all that kind of good stuff. But we are still seeing it occasionally. Typically, it's going to be credits or A house listed under market value where multiple people are competing against it. Percent of cash sales is going to be an interesting one to see. So 42%, so it's definitely going up. This is definitely kind of congruent with this winter market as we start to see the snowbirds are coming down, retiring. A lot of them have cash, buying more higher end properties. But as you can see from this time last year, 27.1% of sales last year at this time were bought using cash. Compare that to 42% now. So it's definitely a lot of investors, a lot of people who have cash, and less just regular home buyers. So if you're selling a regular house, if you're target markets, a regular financing buyer, this is definitely something for you to consider. You're going to have to make sure it's affordable with today's prices and mortgage rates, just to make sure that you're not just getting only cash sales. But this definitely to me shows that having this cash sale amount being high, a lot of investors in the market, and a lot of potential snowbirds as well. Like I said, people coming down, they've got cash, they're retiring, and then also those investors. But it doesn't really seem like as much just regular sales. List to close days is going to be an interesting one. We're going to have 93-ish days list to close. So that's actually gone down pretty substantially since last week. So we're going to see if this trend continues. This is actually a good sign for sellers. This means that your house is going to be listed and sitting on the market for less period of time. Definitely going to make sure though that you're doing our 3 Ps that we constantly talk about: price, presentation, promotion. Knock those things out and you're definitely going to be able to, looks like, get a contract in about 60 days, close in another 30 or so after that. But it definitely seems like sales are taking place a little bit quicker now. New listings is going to be a good one to check out how many new listings we have on the market this week. So we have gone up. So we've gone up about 100 or so new listings compared to last week. So this week we have 471. Last week we only had 394. So as we've been paying attention with the pending sales and the closed sales, having these new listings go up definitely means if you're a seller, there's going to be a lot more competition for you. You're going to have to compete with all these new listings going on the market. If you're a buyer, you're going to have more options, hopefully more negotiating power, and more leverage. Again, if you're a seller, you're going to want to start to see these new listings go down, and you're going to want to see the closed sales go up and the pending sales go up. New pending sales, this is an interesting one that we definitely want to check out. So new pending sales has been going up and remained relatively steady the last couple weeks. However, the actual closed sales, which we checked out earlier, seem to be trending down. So what that shows to me is that there's a lot of potentially investors in the market. There's a lot of wholesalers in the market. And then just the average buyer in general is a little bit weary of what they're getting into. So maybe they go under contract for something, they find some issues during inspection. Rather than negotiating, rather than taking it the way that it is, they're just like, all right, I don't want to have, I don't want to buy this house. Let me go find something else. Those wholesalers and investors, a lot of these people, the wholesalers, for instance, there's a lot of houses on the market, a lot of motivated sellers. They're offering them under market value and then trying to sell the contract and assign it to an end buyer party. A lot of times they're not able to do that within, the time frame that they have. A lot of times those just, the person just disappears and it ends up just, completely just, being pending forever. But there's a lot of things like that going on as well. A lot of investors as well that are just, super, super picky about like, hey, if I'm going to buy this house, it needs to be perfect. They'll enter a contract, try to do, potentially some extra negotiation at that point as well. But we're definitely, even though we have been seeing these pending sales remain relatively steady, the closed sales haven't 100% accounted for it yet. Active inventory, this is going to be, if it'll load, about flat. So we've been pretty flat for the last couple weeks. As we had, kind of mentioned in the last couple weeks, we had a big problem for a while there of, overpriced listings, unserious sellers, phantom sellers. But now, for the most part, the houses that are on the market now are people who need to sell, want to sell, and are actually motivated to get deals done. Supply of inventory, this is going to be how much inventory supply is in the market. So a NAR balanced range is anywhere between 33% and 22%. So right now we're at about 35.9%. So we're outside of